Today is June 1st, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADM Investor Services Senior Financial Economist. Steve, let's start with the grain markets this morning. Volatility is up in the grains. Do you believe this will continue?
Yes, I do. I think that the funds got out a lot of their net grain long positions because of a higher estimate of corn acres and better weather. But now we're completely in a weather market. They're going to come back in and buy longs, which will add to the volatility, also add to the premium people pay for options. So it might be better to look at spreading rather than options to try to take advantage of potential rally in the grains because of a weather market.
Talking about weather markets, Steve, what is the latest in the U.S. weather forecast?
Well, we have some ridging, dryness in the Pacific Northwest, U.S. Northern Plains, and the Canada Prairie. The rest of the country is okay, but for the next 10 days, you're not going to see a lot of rain in the Pacific Northwest, the Northern Dakotas, the Upper Midwest, including Minnesota, Northern Iowa, Wisconsin, and Northern Illinois. We're watching pretty closely the Pacific water temperatures. They are cooling. The more they cool, the higher the chance of a ridge. So right now, we're putting in some dry weather premium that we had taken out recently. And our forecast is ridging this summer, warm and dry conditions for the Dakotas, southern Canada prairies, and maybe the upper Midwest.
This is a time of year that farmers and the grain community does start to look at weather typically. But Steve, are there any other key USDA reports in June?
June is a critical month for the USDA. On June 10th, they're going to come out with new supply and demand numbers. For 21 and 22, for 20 and 21, we think that they're too high, especially in the corn carryout. We'll see if they want to change that. For 21 and 22, they've already plugged in some high acres, a record yield, and the carryout isn't going to change that much. So the report might be neutral, but the trade is going to trade much lower carryouts. Then on June 30th, we get grain stocks as of June 1 and new acreage numbers. And that's probably the most important report. All stocks of corn, beans, and wheat June 1 are going to be below last year, suggesting a very tight supply situation. And then if the acres don't go up as much as people are trading, especially in corn, we could have a very volatile, very upside reaction to that June 30th report.
Looks like we're going to have a grain market here for at least another month or so while we sort out the weather. Alan, the stock indexes are strong again this morning. What is the dominant fundamental and price outlook for stock index futures?
Well, we are seeing some good gains again today, although it looks like we have seen some of those advances given back. I think that might be due to two economic reports this morning that were a little stronger than expected, so that would imply higher interest rates. But longer term, it still looks like stock index futures are going to head higher, and we still have the historically low or near historically low interest rates. So that's the dominant fundamental that I think will continue to underpin stock index futures.
And there's a common axiom in stock indexes: sell in May and go away. Didn't work this year. Why not?
No, and in fact, we're hearing less and less of that every May, or right before May, we hear that that's going to work this year. Maybe it didn't work last year, but this time is the year that it will work. Well, again, it didn't work, and the reason is, and why would we expect it to work when interest rates remain so low? So no, the sell in May and go away did not work. Has not worked in recent years, and it should be no surprise that it didn't work this year. So here we are in June with mostly higher prices. So it's the fundamentals that are still overriding all of these other factors, and once again, it's the low interest rates that will sustain the gains in the indices.
The U.S. dollar, Alan, will this downturn continue?
Yes, it will, I believe, and I believe the next support comes in around the 89.15 level. We have a lot of spending as an inflationary problem or potentially a problem. We have budget deficits overall remaining and likely to continue. So nothing has really changed in the outlook for the dollar index. I think that more of the same is in store, and the trend will remain as is, I think, still lower.
One final question for you this morning. This gold and silver market seemed to have bottomed out in late March.
Yes.
What is sustaining the advance in gold and silver prices today?
Well, once again, it comes back to interest rates. In fact, one key to remember in all of the financial markets, it's the interest rates that dominate everything. And that, once again, I hate to be repetitive, but it's the interest rates that still remain very supportive to the gold and silver. Also, central banks appear to be a bit reluctant to hike interest rates too soon or sooner than they would expect, although there has been some accommodation that was taken away. In fact, the Bank of Canada recently did some tapering. But even today, the Reserve Bank of Australia indicated that they will not raise rates until 2024 at the earliest. So it's the low interest rates that are, again, dominating this market. So higher prices are likely, even though the gold did back off a little bit from highs that were made earlier today. In fact, the highest level since January 11th. Some profit taking set in, but between now and the close today, I think we'll see a recovery and higher prices longer term.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.